Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, to start with, after 5 attempts to the downside, the Australian dollar is holding at 76.85. We've got a doji and a long-legged doji also, which is a little bit of hesitance of the terms of indecisiveness. The market is still wondering if it can actually take on the challenge lower. Nevertheless, the 76.85 bullish foundations is holding, and we do need to see a close sub there of New York tomorrow morning or in the week to support a bearish case to 75 cents. Now, at the moment, we are finding a little bit of momentum, considering that the iron ore over the last 5 days has traded very heavily. But nevertheless, the market has a little bit affected the Aussie, but not so much. The view for the strategy, more to the point, is I'm a seller above 77.45 and up towards the region of 77.70. I don't believe the market has the momentum to take further guidance beyond there. Therefore, we could see the weakness eventually emerge and put a bearish Australian dollar into focus. And I'll be looking for 75 cents as the call. The euro dollar is back above 123. That was a bit of a choppy session last week for the US dollar. It was rebounded back to 89.40, which was the support at one stage, then serving as resistance. It failed to gain bullish encouragement and actually seen a drop from there on Friday and is trading around 89.05. From that, you can see that the market is actually taking a step to the upside for the euro. At present, I'm a seller on rallies, and towards 123.80 figure, we should see another failed attempt. The indicators aren't encouraging to support a bullish case, therefore I expect to eventually see the market turn back towards 122. I'm looking at euro on a weekly pattern here, and it does look like to me that we are seeing some divergence here. As you can see, the lows that are being printed lower, 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 we're getting a rise, and another rise from the RSI. I believe that the bullish divergence will snap into play as we get closer towards 103.55. Now, if you look back here in around September, November time, the market initially staged a very, very strong bull trend, and you can see here for at least 6 weeks is the fact that the market became incredibly bullish. Therefore, I do expect to see the same similar pattern as we move towards 103. So for those that are looking to buy dollar yen, look towards 103.55 for a rebound. And also from a trending point, it is getting a little bit overheated and stochastic is getting a little bit oversold. Well, the pound hasn't gone anywhere too far in the last couple of days and still hovering around this 141 level. I'm still turning to the bear case. The indicators aren't fully supportive of a further rise, and the uptrend now has risen to 139.05. Well, the gold is still playing this roller coaster range of 1,300 to 1,360. Overall, I think we're getting quite close to the top side of the range since the break of 40. The market isn't as bullish as it was on Friday. As you can see, it's dropping away from the highs of 50 and trading at 46. I think the market might retest the level like we've all been probably involved in when it comes to trading, that when you break levels, support or resistance, they tend to get retested. So the resistance on Friday was at 40. That was the key level. So we're going back to retest it now. I do expect to see a rebound from there, but I'm not overly bullish at these levels and looking to short the market towards 50 to 50, anywhere between 50 to 66. Silver, well, the market's once again rebounded from that level of $16.15 and now looks towards the region of $16.80. Overall, you can see the market isn't that strong, so I think we're not too far away from seeing the market retreat from the current highs. And rounded off with oil, well, the market is back to the highs seen in January of this year at $66 a barrel. Although the market is looking impressively bullish, if we get a close above $66, then this would actually see further gains and negate my bearish call that I've been looking from the weekly point and could see a rise up towards the region of $72 a barrel. But let's not get too bullish at these levels and see how it plays out in the next 24 hours. So that wraps up for today. Thank you very much for joining me. I hope you enjoyed the day and a great start to the new week.